Hello friends, how are you? I hope all of you would be in the pink of your health. I am Bharat Bahel, lead trainer at Immaculate Trainers. So what we had been observing for the past 1.5 or 2 months that equity markets are very volatile. If you look at both Sensex and Nifty, they are just trading in the range. The Sensex is moving from 72,000 and 75,000. So once it tries to consolidate above 75,000, the market corrects. So what are the factors behind this volatility? Would this volatility continue, or would there be factors that will contribute towards the rise in the equity markets? We will try to answer few of these queries, and alongside I'll give you few reasons for that also. So first of all, why the equity markets are trading in a range? So there are five main factors for that. First, Indian markets, in Indian markets, they are volatile because there are elections in India. The Indian markets, they want to see what kind of government comes. Would it be a stable government or would it be a coalition? So good sign for the markets would be if there is a stable government that comes. So results would be out on 4th of June. Second, the Indian markets are very costly as compared to their global peers. We are relatively very costly. So if you look at the China is cheap and we are costly. So what is happening because of that? The FIIs are pulling money from the Indian equities or Indian markets, and they are putting money into the countries like China. They may come back post elections, but currently the trend is like that. Although the effect of selling of FII is slightly balanced by the buying from domestic institutional investors like mutual funds, insurance companies, and the direct equity that domestic players are taking. But the selling pressure is on the higher side from the FII. So FII has sold close to 60,000 crores year till date. The third reason is that inflation is not under the control of federal bank. So federal bank in US is just like a Reserve Bank of India, of a Reserve Bank in India. So it is the central bank of US. So they are trying to control the inflation. So the ideal inflation figures they are looking at is 2%. So currently the inflation is around 3.5%, which is outside their comfort zone. So because of that, they are not cutting the interest rates. If the inflation subsides, they will cut the rate, which would be very fruitful for the equities because the liquidity will come into the market. Then another reason for the volatility in the global markets as well as India is that the conflict between Israel and Iran. Because of that conflict, the prices of crude are rising. From March till April, the prices of crudes have risen by 6%, although the prices have cooled off a bit in the month of May, but still they are on the rise. And as you know, the India, we import the crude. We are not the exporter of crude, we are the importer of crude. So this increases our bills. Then another reason which is there, it is hardening of treasury yields in US. So because of all these factors, the Indian markets are volatile as well as global markets are volatile. Now, apart from that, we have got this costly factor attached to our equity markets also, which is sending jitters, right? And what you should do in this current markets? So first of all, just look at whether your asset allocation is correct, whether you have put money into equities, you have put money into debt, you have put money into commodities like gold and silver. So obviously you can be overweight equities, but you should not put all the money into equities. So if you're buying schemes from mutual funds, try to put money into funds like multi-asset, equity and debt, which is basically a balance category, or hybrids, equity hybrids of the world, or equity savings, or equity incomes of the world, which will give you exposure to equity, which may give exposure to debt, which may give exposure to arbitrage, and multi-assets, which may give exposure to commodities also. Now, once you balance your portfolio, another thing that you have to look in equities, Is your portfolio tilted towards small and mid caps? Because the small and mid caps are costly as compared to large caps. And see, the from the long term, if you compare them again, the long term averages, the small of mid caps, the contribution of small and mid caps is very costly, is on the higher side. Say they contribute 36% of the total market capitalization, which is very high as compared to the past. And the large caps are slightly cheaper in valuation as compared to small and mid. So your bent should be towards the large caps. That will bring stability to your portfolio. If you will check all these things, definitely your portfolio would yield decent results. As we feel that in a longer term, the equity markets in India are in a sweet spot. Wish you a wonderful investment. Thank you.